What's going on, everybody? Time for another YouTube recap. As we always like to do, let's start on X, the old Twitter. As I did for my chat here about 7 o'clock this morning, we did a little bit of a breakdown, or a little bit of a call rather, for a nice little push back up. We've seen a 10 SMA loop. So this is the 10 SMA in the blue right here. On the 5-minute chart, price action had broke under it, and generally it will loop and then pick a direction after the loop. They always make little cups the first time they dip through the 10 SMA. They fake everybody out, they do the pop, and then usually drop again. So said we had about 35 points available there, up to 18,433, and then our final call is 18,500 today on the longs. So as you can see, that one worked out pretty good. We nailed the first little trade there, 25. And then moving into our further prediction, I wanted to see anything above the 100 EMA hold long. Okay, so the whole day, and this is this hard green line right here. This is the daily representation of the 100 EMA in the green, and we'll get into that in a second on TOS. So anything long above, and I wanted to get up to 532. That was the only target I had for today. And let's see how close we got to it and what happened and how you should have played it. So as we come into it right here, 100 EMA, like we said right here, 528.62. So first, let's shrink this down. Let's get a nice big old chart going on. Boom. So we didn't have any algos, no pre-market stuff, no fun stuff, no big data points, nothing like that to work off today. So flying blind with a wide range on the VWAPs. We had some really big VWAP range today, which is really cool. And the purple dash line right here is my regular VWAP, and I use +2 and -2 deviations away from that VWAP in order for our indicator to track down trend, okay? So we had the open, and I said anything long above the 100 EMA, we look long. Obviously, that means anything under, we go short. The 100 EMA daily was the over-under today. So we popped up, came back down, tested confirmational strength. This was the dip buy right here that I called, and we dipped and did about a 50-point intraday move, and we ended up with $3,800.60 in P&L today for all the top step accounts. Now, I did some options too, but this one right here was a huge one because of the 100 EMA, and let's talk about trend and what we've seen after. Now, 532 is where I wanted to get to, and of course, as you notice, we did shy that by just a smidge here. So if I mark 322 here, pick it off, you can see how close we were to 532. That's pretty freaking close. We always trade futures off a SPY, so if we take this high and there, we missed it by about 3 points. So not a big deal. Pretty good call regardless, especially on the Qs. But what would we have done other than this, right? So I had a high-low range Fibonacci, and this is how I would have played this one because we don't have any algos, we have no data, we have nothing going on. So how do we get this, right? How do we play this? So number one, I would grab this right here. And you notice I'm not really grabbing the exact bottom right here, the range for Fibonacci. I'm drawing a high of day down to the tag of 1, 2, 3, 4 different 5-minute candles. I wanted to make sure the data on my Fibonacci was enough to be tagged by all 4 of these candles. More points of interest equals stronger Fibonacci levels, okay? So my last call was hopeful to get up to 532, okay? So I wanted to get back up there, and it pushed, made the lower high, started the breakdown, okay? So we didn't make it out to the target, no big deal. We had 3 really big trades regardless, but let's look at the confirmation that it gave us for the opposing trade. So if the 100 EMA on the daily is our over-under, right? Let's take a peek on the confirmation side of things. I always like to keep a 50 halfway point through RSI here. Let's draw that real quick because I don't have it on this new chart. But the oscillation indicators now were giving us some pretty good signals. They were written all over it, okay? So the lower high of the day is set. We come into the Fibonacci, pushes up, pushes to the golden pocket. And I said if it holds the golden pocket, which you could see hold here, 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 about 4 or 5 minutes, about 20 minutes worth of consolidation. If we held that, we had a good chance to get to 532. If we didn't, we broke it back down. You're obviously going to stay under the golden pocket, and that's how we always use the Fibonacci box ranges, right? So if we stay under the golden pocket, we'll point to the downside. So what do you do with that range? Well, you take your initial high-low and make sure you extend it to the proper way. So what I'm going to do is I'm going to extend that down just as I did up. So now what I did is I made a little Fibonacci sandwich. My high-lows are pointed 0 and 100 both ways. So I got 1618, 2618 above us, 1618, 2618 below us. And then, of course, our famous 423.60, which is the biggest one. So we got that breakdown from oscillation. Let's take a price action versus oscillation indicators on the bottom. Look at that RSI. Came up to the hot point, hit the 50, bounce, and broke through on trend. MACD with the perfect lower high and small buy wave. This is one of the biggest indicators right here for the day, put in at 10 a.m. right as we were getting off stream this morning. We had a bigger sell wave than the buy wave. That histogram wave right here, using the MACD. And if you're not familiar with how we use it, we have an indicators we use section on this YouTube. Give it a shot. Teaches you how to use these max like this. We put in the lower high on the moving averages. We put in the lower small buy wave, and then the sellers took over and separated and went straight down. Now look at the Fibonacci here. Box. Look at how clean this was. Price action broke through the golden pocket, snapped out, hit the 1618, right? Came back up and looped and swooped down. It was perfect. So from then on out, from 10:45 a.m. Central here, you can see that the MAC was crossed to the downside and the RSI was in the bottom of the channel. That means the RSI is under 50. We are in the bottom channel of the RSI. Same with the MAC. Under the 0 line equals downtrend. RSI bottom equal downtrend. That's a higher percentile, right? Nothing's guaranteed, but that gives us at least inclination of data. So this turned into a pretty good algo sell. It got stuck to the -2 deviation right here on the VWAP and never let go. We lost the purple VWAP right here. The golden pocket broke out of the fibs, hit the 1618, 2618, 423.60 to the penny. And generally the 423.60 is a really good counter trend bounce scalp for the day. So if you notice the MAC, it was relentless. We never gave up RSI or MAC. That thing just was heavy all day for the remainder of the day. And then it tipped into 423.60, and what do you, lo and behold, give you a nice little pop there. So a counter trend scalp would have been very viable near the 2618 and 423.6. Now this one would have had the 666 simple moving average in the purple here waiting for us. So price action came down, hit the 666 along with the 2618 area, okay, and then give us a little bit of a pop. So both of those would have been a valuable support, and then 423.60 as well, netting us probably another at least 15-point bounce. Let's see here, 423.6 purchase to the top, 30 points. Jesus, I was way off. VIX is still high, range is still crazy. All right, so with that being said, that's how I would have played today's action in swapping your bias, right? So when we wanted to swap that bias, we have really good confirmation from the oscillation. We have really good confirmation from our sandwich fib up here. And let's get into Qs and the anchors real fast in the last part of the video on how I would have attempted some turnarounds via anchor. So let's get into just a single pane like always here. There we go. So we have the same Fibonacci over here. Let's delete that. Let's pay attention to the anchors. So the anchor VWAPs, this was a pretty good tall tale sign too. It got stuck under some of the lows. And what happens is the day opens up. Let's just redraw these. And I'll explain. Okay. Oh, 16th time. Oh, 17th charm. There we go. It's trying to delete the candles. It won't pick up the line. Good old TV. There we go. So from this lower high, let's draw some anchors, okay? We have anchor VWAP. We'll start from the lower high, a little bit of a pick right there. And that's the bottom, so I'm just going to throw it on the low right there so we don't have to redo it. All right, so we got our anchor VWAP on the last bit of the high. That's the lower high. And then you notice that we never came back to that. What does that mean for us? That means we changed the color to a beautiful blue because we will need a back test of this anchor VWAP at some point, hopefully coming into tomorrow or when it bounces. So we have an anchor VWAP from high action of the day. This is high price action, okay? So when we tag a anchor VWAP to a top and then you never see price action get back to touch that anchor, that means we are now in position to allow a first tag. And I'm very adamant on this channel and as our live trading in our Discord chat about first tags. Let's turn this blue so we know that we do need a tag on this anchor, which means as we come into whatever price action happens in the next coming days, this blue anchor will be chasing the price action down. And when we do confirm a reversal push, find the confirmation for it, that anchor will become a target, okay? And now let's look at something interesting here too on the next anchor. So the next anchor is low of day at the opening range. So the opening range is set. We have a low of day here and we have a tag when it pushes up from the highs, creates the lower high end, snaps it, retraces back, and then runs. That's a pretty crazy run, to be honest. Let's check a couple of different anchors here. That's a very, very weak market. So this one is already a tag, so I'm going to go ahead and we can delete this one, but I'm going to move it down to pretty much the last candle of the day. I think, yeah, that's not after hours here. At 2100, yeah, that'd be that one right there. And we'll use that one for tomorrow as well. And that is going to be a blue one. We'll see on your next video when you tune in for tomorrow's video. We'll see how both these anchors play out. So what other anchors could I have used to potentially find and continue trend? Well, I would have started building on every lower high. I would have started building high anchors here on the way down to try and find residual continuation. So let's put a high anchor on all these lower highs that we see. See, there's one. There's one. So we only had one. Look at that. Wow. So we're going to keep, wait, is that a tag here? That is a tag. Okay. So we have a tag on this guy, a tag on this guy. Look at the confirmation. So for that first lower high and another little peak right here, look at the price action. Came from this Vwap, comes down, pushes back up, hits a top down. So this is the top of the candle, pointed to the downside of the anchor, catches up as rolling resistance, runs away, runs away. You wait for the retrace. Confirmation of short and trend, okay, is a back test of this anchor Vwap. So we hit it there, back, boom, resistance, comes down, runs away for the rest of the day. That is another great, fantastic range that I would have used. Let's look at one other example of what I would have used for anchors, right? So you know I like to use the pre-market and overs a lot of the time. So let's build some anchors from yesterday's price action. Let's take the high of the dump. Boom. Okay, let's take a peek. Did that get a hit on same day? It did. So if we peek the anchor here, hit it, that is a hit. We do not need a first tag. Now we're looking at second tags, which become less likely. So let's take this anchor. Let's move it down. Ooh, okay, we got a no tag. So this would have been blue coming into today. Let's make it green just so we can find it. And this was going to be an anchor for the short. So the short side of things would have told us, if you were using this anchor right here, that we need a back test live of this anchor. So when we opened up today, here, all pre-market doesn't count. Live data here starts, did the top, and boom, into the green and continuation. So another way to look at this is if it were to start failing the golden pocket in Fibonacci we had built in the first part of this video, the target one would have been this anchor because we have no tag of the green anchor yesterday. It's another big reason in how I use these anchors. Now let's go to a low anchor real quick. So I'm going to do the same thing, but I'm going to put the anchor on the last candle of the day where I know there's going to be a no tag, and this also would have been a directional pick and potential tag. So there's your low side, and there she goes. So another anchor right here for a low side. So if I would have had both of those anchors on, it would have told me, hey, if we start failing the Fibonacci and high range up here under 532 on SPY, it's going to look a little bit different here on Qs. That would have been a range to catch up for a short target. These would have been short targets on the way down because this anchor and the one from the lower high were not tagged. Okay, that is some examples on how we use these anchors. We're about to do a lot of live examples with these, so I will have a lot of videos on that as well, and we'll do some shorts on that as well. So let's get into the longer standing time frames and show you the last little bit of how I probably would have played this if I could. So the 30 minutes, I like to drive the opening range consolidation here for fibs as well. So if I can't find anything, there's no algos in the pre, there's no data, there's nothing, there's not even a gap, there's nothing for me. We're just searching for TA to use. If I see deep consolidation like this on what happened on the Qs here, I'm going to grab the range here of the high low of all these 30s. And I'm going to make sure they're all touching, right? So I'm going to grab these guys here to this guy here, and that would at least help me with a continuation metric as well on a longer standing time frame. Because what I do is I draw the 30-minute Fibonacci high-low like this, and then I'll go into the intraday, and it'll be pretty close to what we have, but not exactly. Not every day does it line up. Today it did. So this is another good example of utilizing that higher range time frame and then dropping back down into the intraday, into the minute, into the 5, and then allowing that intra price action to kind of help you dictate the flow of a longer standing time frame. So if I use a 30-minute high-low fib box right here, and you see the minute chart, we got a little head and shoulder breakdown, hits the bottom of the box, squeezes back up range, and then you can see that slow and steady roll over there on that minute chart. And some of those minute anchors will also come into play for continued trends. So you see the last high right here. Let's fix this one just for fun, just for the minute chart. There's another one. So look at these continuation Vwaps here. The blue one is still a no tag, so we are still going to be paying attention to that. But just on the 1 minute top down from this last lower high that stayed under the Fibonacci's 50 and confirmed the breakdown out of this consolidation. Let's take a peek at what it did. Range down, huge wash, back test, hit number 1 of anchor. Huge wash, back test, hit number 2 of anchor. huge wash and runaway controlled sell for the rest of the day. But we did get 2 opportunities for shorts on confirmation. Okay, we are confirmation traders. So this anchor is a chase. It is rolling resistance. I don't care if it's rolling up or down. It chases the price action. So when we anchor something like this, and then it goes and goes and goes, we wait for the price action to push back into said anchor, thus limiting our risk and giving us a much better advantage to enter a trade instead of shorting something down here or down here and just hoping that these big washes continue. We don't hope. We don't gamble. We trade. We keep it simple. We use confirmation. So these runaways and these back tests are very good precursors for entry to limit that risk. So those are a lot of examples with Fibonacci and anchors today on how we snuck out of the market with another fat green day. If you want to support the channel, we got codes for Apex Trading if you're a funded trader, Top Step Trading, reach out to me on Twitter. Or if you want to trade live with me and the team every single morning, we do it. Link is in the description to hang out. We hang out and narrate every single one of these trades throughout the morning. Usually trade for the first 2.5 hours open. That sounds good. We'll see you in chat. If not, see you on the next video.